All right, good afternoon, guys. It's 4:30 p.m. on Saturday, January 5th, 2019. And I believed I did wish everyone a Happy New Year, but if I didn't, Happy New Year. And so just want to do a really brief review of some trades from last week and take a quick look ahead just on the economic calendar. I'm not going to really talk much about trade setups for next week unless I see something as we go through here. Um, Perhaps I'll try to. I'm going to be traveling for a few days next week, so I don't know if I'll be able to make another video. But anyways, just want to look back and hopefully you guys have been following some of these trades and took advantage of them. Um, first one to look at here is the Euro Yen. This is the daily chart, and so on the Euro Yen here. Um, this big move down here was a flash crash. I think it was on Thursday. It was Thursday or Wednesday, Wednesday afternoon, New York time, just before the 5 o'clock changeover. The Australian dollar had a big, what they call a flash crash due to some China news, and that also caused the yen to rally. So all the yen pairs sunk, and all the Aussie pairs sunk on that news, and so it caused these really big moves down, and then the market snapped back. And so that's, if you look at all the yen and Aussie pairs, you see these big giant wicks and these big moves down. That's what happened there. So originally when I saw this, I was looking at this as the end of a correction on the daily, 1, 2, 3, 4, 5, and I had a take profit set here, and you can see it blew well through there. Now, unless you had a take profit set down here, your broker probably did not fill you, even if you were in this trade. If you tried to get out down here, you probably were not able to, because the liquidity just was, the brokers kind of, choked the market because of these big moves. So if you had to take profit down here, maybe you got filled, maybe not. But as you can see, I only got a very little piece of that, so I was kind of bummed about that, because even without the flash crash, what happened right here, I probably could have picked up, even if I had gone to the top of this candle, it was another 100 pips. So definitely not a good judgment on my part. I mean, it was a profitable trade, but I left a crap load of money on the table. So, but it was still a profitable trade. So, but like I said, not what I intended. So, okay, so take a quick look at a couple of losses here. So this is the Canadian Swiss. Now, Canadian news had some really positive economic news. Employment news came out this past Friday, and that really set the Canadian off. And I'll show you the economic calendar in a few minutes, and that could have an impact on the Canadian dollar coming up this week. But you can see this little move right here, and I always show you some that are losses too. Now, so this is I'm going to go down to the hourly chart. So I went short right here, and you're like, well, why the heck would you be going short right here? Well, because I was looking at this as another little move down of this trend. But it turns out this whole move down is really basically an ABC correction to an uptrend. So the market bottomed out right here, went up, and I saw this as an ABC. And then the market went down, and then it took off. And the Canadian actually was strengthening even before that news came out on Friday. So my takeaway from that is I go back to the daily chart, and when I look at this on the daily chart, and this really just goes against what I normally do, so it's a little frustrating. And I'll take those arrows off there. So what you have here is no entry. I mean, I had gotten in down here. There was no entry. This would be an entry. This would be an entry. This would be an entry. There's no entry. I was just trying to scalp a few pips off the lower time frame, and I did, and then I got stopped out, which is fine. It was only a small loss. But the takeaway to this is that the market clearly had made a bottom here. There was no entry, and then once you see this big bullish candle take out these highs, then really just be looking for long. So for now on the Canadian dollar, I'm looking for longs. And like I said, there's some pretty important news coming out, and so we'll see how that plays out this coming week. So Aussie Swiss. So this is what I want to show you, where very, very frustrating. And it's not usually a mistake I make, but a lot of traders do this, and it's just something to be aware of. And this is just called putting your stop loss too close. So here's where I went short. This is the Aussie Swiss on the hourly chart. And you can see the market was in a clear downtrend. I jumped in on what I thought was the resumption after this little correction, and I was right. But you can see I had my stop loss up here and a little further away, and the market took me out. And then we had that flash crash again on the Aussie. So, but even if I had only was able to get filled at this point and the broker couldn't fill you here, it still would have been a nice move. And you can see the market has reversed since then. And I would tell you guys, from the Australian dollar, I'm staying out of any Aussie pairs right now in terms of trades until we get behind this flash crash a little bit and I can see some new patterns start to emerge in the Aussie, because this is really throwing me off. You look at all the Aussie pairs, they all have that. And so for now, I'm kind of standing pat on the Australian dollar, although I do like trading it. So I'm not saying I won't look, but that's one of those things. Australian yen. So again, if you look at the Aussie yen, again, here is your flash crash. Now this one I actually had to take. I was in, and when the flash crash happened, again, it went a lot further than I originally thought because no one was expecting this move down. But you can see my trade. Here was my trade. I got in here, and then the market crashed. And again, very frustrating to see all these pips you left on the table. I still made out really well on this, but as you can see, I probably could have doubled at least what I made, even if I only got to this point. So, and again, it snapped back after that and has been moving back up. So, but really, if you ignore, if you just look, so I mean, again, excuse me, if you want to bring this back to an Elliott Wave theory, if you just ignore this wick and just look at this area right here, this is a 5-wave trend, 1, 2, 3, 4, 5, and the markets. So, an Elliottician would say, look, this really was just an end of a trend, and this wick is is what happens in the market sometimes with just exuberance or fear being aggravated, and this went down. But if you ignore this wick, this really is just a very clear end of trend. In fact, in reality, on a lot of these pairs was the same thing. Just really with the Aussie Swiss, I mean, I got stopped out because my stop was too close, but it's the same thing here. If you ignore this wick on the flash crash, basically you got a 5-wave trend here. 1, 2, 3, down, 3, 4, 5, and then out. Now the 5 is a little distorted. It's not as long as the 1, but still it looks like a trend. And maybe you can say, well, it came down to here, whatever. And then the trend ended. Now it's going up. And we'll see where it goes from there. So, you really could make that case on the Aussie pairs that really what you're looking at is just a regular trend and just ignore most of these wicks. And now just pretend this isn't here and just continue your analysis without the wick. So that's what I'm gonna be looking for, some Elliott Wave patterns to play out and to see whether these continue to just build new patterns from here. So anyways, and all the Aussie pairs are like that. And what else? What else do I want to look at here? Let's see, Kiwi pairs. Kiwi Canadian. So I showed you this as an example. So a lot of times what will happen is when the market changes over either from Asian session to the London session, or from the London session, or excuse me, from the New York session to the Asian session, you have a big liquidity drain, and the spreads will really widen. Even no matter what broker you have, you're going to see the spreads widen. How much it widens depends on your broker, but you can see what happened. I had this big. I don't know what happened with this. I haven't been able to figure this out. So I got stopped out on this short here. I got in. I was in profit, and then but you see this little red. This is where I got stopped out, even though the price never got past here. But so this whole area in between here was how far the spread widened from your exit price to where your stop loss was. But this is where your stop loss, my stop loss was, but the price on the chart actually only got to here. So on this candle, so this was all from the spread. So I'm not really sure if that was changeover because that's a lot more. I mean, even if it goes 20 pips, this is a lot more than 20 pips. It's 40. I'm not really sure what happened there. This is one I've just scratched my head on. I didn't see it. I don't really know what happened right here. It wasn't really part of that flash crash because that was here, this big wick right here. So this was several hours later. So it didn't really have anything to do with that. So that was a little minor loss. Again, it was a very small loss, so I'm okay with it. Let's see what else. Euro Canadian. Euro Canadian. So this is another example of having your stop loss too close. Look what happened here. And again, this is just mistakes that I shouldn't make. But I want to show you, the good and the bad. So I went in short here, had my stop here. The spread took me out, and then look what the market did. So this of all the ones I had this week, this is the most frustrating one. I mean, the Aussie one, the Aussie Swiss, where it had the flash crash and I got taken out before that. That flash crash was unusual, but this is just normal movement, and you can see how far this went. So I probably should have had my stop somewhere significantly higher away from the price action. So take that as a learning lesson, guys, because what happens is, the big traders and banks are looking for liquidity. They know that most retail traders are going to have their spread above this swing high. So they push the market up and you get a little liquidity drain. They take you out and then they push it down. So instead of putting your stop here, put it up here. And if you're worried about the risk, then just make your position size smaller, because I know this is a lot more distance here, but if my stop had been up here, I wouldn't have been in any danger of being taken out, and then I would have been in for this ride down. So I wanted to show you that just as a learning lesson. Be very careful where you place your stops. And sometimes the place where you think it's the most obvious is actually probably the worst place, because the large traders and large banks, they know where your stops are, and they're going to look to take you out, so they get all that liquidity before they push it down. And so like I said, either use a different position size or just put it up higher and get it out of the way. So really a critical thing. So but I had some other really good trades too. Let's see. I want to show you the US dollar pairs too, but I didn't take any trades. Well, I took one, but okay, Kiwi Canadian. So this was one. Go back to that. So here's one I took on Kiwi Canadian. I actually, again missed the wave 5 on this, and we had this. This was the flash crash, so it actually almost took me out here, but I got in right here at the end of this correction. Let's go up a little bit. So this was a Kiwi Canadian. We had a 1, 2, 3, 4, 5, and now we have this move down. Okay, so there's the daily chart. You see the 5 wave up. Then we had this strong move down at the end of the trend. And then we went down, then we moved sideways, and I was waiting for the breakout. And as soon as it broke out, I went short. And you can see I took it down to here. Now, there was a little bit more here. This is an hourly chart. I probably left about 20 pips on the table to this point here, but that was a decent one. I still picked up a pretty good number. Aussie Canadian. This was also affected by the flash crash, but I want to show you Aussie Canadian. And you see here, this is where I got in again. This looks just like the one I just showed you. This looks just like that Aussie, the Kiwi Canadian one. This is the Aussie Canadian. It looks almost exactly the same. The charts almost look identical. 5 wave up on the daily. Trend ended. We had this kind of sideways pattern, and it broke down. Then I saw it going sideways. I'm like, okay, I'm going to wait for this to break out. As soon as it took out these lows, I got in. This was my original goal, which was 1, 2, 3, 4, 5. And then we had the flash crash, and I actually was in this trade when it crashed, and I couldn't get out of it. And I'm still fighting with my broker about this, I'll be honest with you, because it was down here and I was watching it, and I couldn't close my trade. And so you can see how much of it I gave back. So I was kind of, quite frankly, pissed off about that. But I'm not expecting the broker's going to do anything. They're going to just tell me it was market conditions. But I actually did get in. But again, the origin of this trade was the end of this uptrend, and then at least an ABC correction down. I'm not sure how far. If this is going to resume, or we're going to see the uptrend continue. But that was the origin of this trade, was the end of the trend that I saw here. And I waited for it to retrace. So this was basically a 1 and then a 2 up, and then this was the wave 3. And I basically got in at the wave 3 of 3, which is going to be the meat of the trade anyways. And then with this whole flash crash just kind of screwed me up. So anyways, had a few more like that, so I don't want to beat that dead horse. I did want to show you the dollar pairs. And this is one that I did take, and I want to show you that. And basically what we had here is this candle right here is when the news came out. So so what was the news? The news was non-farm payroll. Let me go back to this week here. I want to show you this. So here we are this past Friday, 8:30 New York time. We had non-farm payroll came out and blew away the job number, 312,000 versus 179,000 expected. Average hourly earnings, which is the really the number they look at probably more than anything else, because this is wage data, and also could be potentially, how much are people actually earning? Yes, there's more jobs, but how much are they earning? So the wage data went up, jobs went up, the unemployment rate ticked up slightly, but this is still a really low unemployment rate, 3.9. So even though it's worse than expected, it's still really good. The market may have had some concern about that. And then the other thing we had coming out at the same time was Canadian dollar employment news I mentioned before, and you can see both the job number and the unemployment rate beat expectations, and that accelerated the move up on the Canadian dollar pairs. So that's why you saw the Canadian dollar rally, was because of this. And so just back to the chart. So it came out, the market kind of dilly-dallied along, and then it started going up, and then it went down again, and I got out when it got to here. And my whole thing is I hadn't traded this pair. This is the US dollar Swiss. I hadn't traded in a while, because you can go to the daily, you see this is just, garbage. Overlapping candles, inside this channel. This is basically a corrective channel. And so, I mean, normally when I see this on a chart, I just keep going. I'm not interested in this at all. But because of the news, I went and watched it. And, you can see here on the 4-hour, even here, it's still all garbage, hash and trash. Honestly, I should probably never have traded it. But when the news came out so positive, what I really was hoping, I was going to be clever and I was going to catch the breakout, that good news was going to break it out of this channel to the upside. Then maybe we come back and retest it, and then it would keep going. But it never did that. And I will keep watching it to see, perhaps it will eventually do that with that positive number. But right now, and I will not be getting back into this US Swiss until if and when I see it break out of this channel, and definitively. So that's just, the point about that is not trying to second guess the market. And then the the euro dollar, which of course is the exact opposite of the US Swiss. Again, on the euro dollar, I haven't traded this pair in a long time either. And again, you can see why. All of this junk right here, this is just garbage. I have no interest. I've been seeing this on the daily, and I just keep moving on. Not interested. But so here's where the news came out right here. And so this, you could probably see this because, you see this move down that came out before that, and then you see this move up, looks like a correction. The news comes out. You see this, A, B, C correction. The news comes out, and it's positive for the dollar. You figure, okay, the euro dollar is going to go down. So it went down for about 2 hours, and then the turnaround went right back up again, right back to these highs. Now, at the market close, it looked like it was starting to go down, but you can't really go by that. That's market close. But I will be watching this potentially for a short. But again, this worries me, all this junk. But potentially this could be a short into next week, because we did have this strong move down, and this does look like a correction. and we did have that positive data, but the way it snapped back like this is a problem. And I'm thinking the reason why this snapped back up and the U.S. Swiss snapped down is because we still have the shutdown going on in the U.S. government with the partial shutdown, and so I think that's draining the U.S. dollar positive sentiment. So even though the job numbers were good, all the stuff flying back and forth between the parties regarding the partial shutdown is weighing on the U.S. dollar. So I think that's probably what caused this to snap back, was just market sentiment. But from a pattern standpoint, this still looks like it wants to go down, but we'll see. So I will be keeping an eye on the euro dollar, and by default, I guess the U.S. Swiss for follow through. But until I see something definitive, I will not be trading either one. The euro dollar, as you guys probably know, is the most heavily traded pair in the world, but I can tell you it's one of the ones I less frequently trade. This is probably one of the pairs I trade the least, even though on the world stage the euro dollar is the most widely traded pair, which is why the spread's usually so low. But it's not one of my favorites by a long shot. And the U.S. Swiss, of course, is just the opposite of the euro dollar. So watch these next week for continuations, or whether they just go back into these trading ranges and then I'll just ignore them, or potentially, maybe we'll get a breakout. So, and the last thing, guys, is just on the Canadian dollar. So I just want to go back to the economic calendar for next week. Coming up. So, of course, we had the news last week, but on Wednesday, this coming Wednesday, we have very big news. This is Canadian dollar monetary policy. So this is the central bank interest rate decision on Wednesday, the statement, the rate, and then the press conference 15 minutes later. So I probably will just let this news come out and let the press conference happen. Then I'll decide what I'm going to do. It's really a little early to be looking at the patterns for me to come to any conclusion. But this is a major piece of event, so be cautious. I'm not saying don't trade it, but be cautious what you're doing on Wednesday with the Canadian dollar. If you're in any Canadian trades at that time, I'd be a little bit cautious because it's bound to be volatile one way or another. All right. So, and again, you can see how the Canadian dollar strengthened on these. It was already strengthening. Then the employment report came out Friday, and it sent the Canadian dollar higher. Here's the chart Friday on the Canadian yen. You look at the euro Canadian, euro Canadian, all this moved down. This was all driven by that news. Look at the US Canadian. Look at that. That looks like a nice trend there. So I'm gonna see what happens when this Canadian dollar news comes out, whether that ends this trend and we get a temporary bounce or what happens. But there could be a trading opportunity. I just don't know what it's going to be right now. So. And then the last thing for economics next week really is on Friday with the U.S. dollar CPI, core CPI. If that comes out positive, I think that'll be really, really good for the dollar coming off that good non-farm payroll number. There is some British pound news on Friday, but again, GDP is normally a very important number, but with everything still kind of circulating around Brexit, this may or may not have an impact. It would have to be a pretty big deviation. They're not expecting any change. So if it comes out at 0.1 as expected, I would expect it's going to have very little effect on the market. And I don't think this manufacturing production number will have much effect either. So, but, it might be worth keeping an eye out. But I think the bigger things next week are certainly on Wednesday, the Canadian dollar bank rate and the US CPI on Friday. So keep an eye out for those. But that's really it, guys. I had a good week, even though I showed you a few of them things I got frustrated on, but I still had a really excellent positive week. So hope you guys had a good week. And like I said, I showed you some of the trades, but I had a lot of other ones, but I don't want to make the video an hour long. It's not worth it. So, but listen, if you have any questions, comments, like the video, share it, leave comments. Like I said, ask questions. And I might try to make one on Tuesday evening, the night before the Canadian dollar release, if I have time. Like I said, I'll be traveling, but I am going to be looking at the CAD pairs very closely leading into that bank statement news on Wednesday. So that really, from a fundamental standpoint, is the highlight of the week as far as I'm concerned. So But I'm sure there'll be some other good setups. And again, I'll be watching the Aussie um, and kind of leaving these wicks in the past on the flash crash and just kind of moving on with these patterns. So I'm trying to keep my eyes from looking at these. So anyway, so that's it, guys. Have a good rest of your weekend. Let me know if you have any questions, and we'll talk to you all soon. Thanks.